Okay, excellent. We are off. Well, guys, I hope there's enough going on for you to keep track of, keep you busy, keep you thinking. Oh man, boy, is there a lot going on. Let's see. Let me pin this to the top. Anyway, let's get started. As always, you can. Let me get my study up and going. There we go. As always, okay. So this is Sizzle Stocks. If you have some tickers you want me to look at, drop them down in the bottom of the chat. Let me fix that. There we go. Drop them down in the chat. Any tickers, we'll take a look at them. As a quick reminder to anybody joining us for the first time, I take a look at various futures markets, various commodities markets, individual stocks, and we take them, look them through the lens of the volume profile, which is this histogram of volume over on the right-hand side. So that's our rule, and as in ruler, as in guide, and we take about a half hour to go through them. All right, let's see. What do we got? Did I see Disney? All right, and what else? I need to. This pinning on the top is not helping me. Disney. All right, let's take a look at Disney. Bed. DIS. All right. Let me make sure that came up. Good. Okay, Disney. So we are looking at the last 30 days. I don't know why it's defaulting like that. All right, we've got a couple tickers. We will get to those guys in just AMD, MRA. See, guys, thank you. And let's take a look at Disney here. Okay, well, you've got this lumpy building pattern of volume down here. It's right off the point of control. So this is where the most volume has been down here where it is. It looks generally bearish, although it's a little scattered to really, say much about, to have too much conviction. But let's zoom in time. So that was a 30-day. This is a 10-day. So you can see volume, tapered off down here, and it's built back up over the last 10 days. There could be, most likely, I suspect we've got a range building right around this $93 range, up from 95 down to 91. It's a little bit outside it now. Question is it going to initiate higher or revert? I think, probably here, but it's kind of hard to say. But that's not, that is at odds with it continuing lower. It's not a bearish indication. Here it looks like it 5-day. It looks like it's kind of peaked, initiated on low volume. So we'll have to see if this is something new. I would say just in general, this is a wait and see. Disney is. There's nothing compelling to move on right now. So wait and see on this one. All right. I hope that helped there. MARA. Looking at Nikhil for puts. MARA. All right. Looking to go bearish on this. Yes. So this looks all right. Who's this? Marathon Digital. Oh. Bitcoin. Gosh, I really, just in general, I love the miners right in here. Although it's Marathon, they're not really miners, are they? They just kind of hold them. They just kind of buy Bitcoin. Bitcoin has definitely acted. They're really starting to react to a Fed that just has to let inflation rip. We are in the death throes of fiat currency. So Bitcoin is good, but I'll tell you, but let's just stick to the chart right here. What this chart is telling us is this, it's kind of played with this range here. You see this, how we're bounded. We've got a nice formation building up over the 90 days, and it looks like there's a decent range. God, it's a wide range. Oh my God. Think about it on a percentage basis is a 50% range. But I would say we're going to zoom in, see if there's anything motivating this thing over the near term, but it's at the upper end of the range and could very likely, this looks somewhat bearish. Looks like it wants to trade lower, but we'll see here. Also, it's kind of upper end of the range here. You know, not a massive move, although a dollar on an $8 stock is still pretty good. 12.5%. This looks a little bullish, up to around 9, possibly 10, but not. I wouldn't. This is not a massive. This is not incredibly convincing, right? The drop off here is kind of compelling, but you know the volume is scattered and high throughout here, so there's no real bias in the volume. Same thing on the 5-day. It's a tough one. It's a tough one. Looking at it 1 year, yeah, it's a tough one. I feel I can't really pull too much out of this. Longer term, it looks kind of bearish, but my God, what Bitcoin has to, the eye of the needle that Bitcoin has to pass through over the next few months, is going to be something. All right, what else did I see? All right, so that's that. AMD from Tatiana. All right, okay, let's take a look, Tatiana. AMD. So here's out to 1 year. Ooh, boy, a lot of volume down here. Let's zoom in. Can't really tell much from that. So it initiated new action. I mean, AMD's just been, doing generally pretty well, right? This is possibly, so it initiated and now it looks like it's consolidating, or it could be building around this range. So this 95 could mean a new range, right? It may have left this 73, this value area down before, so it's on to build. It's incorporating new information. That's the way I would read that. Let's zoom in though. We'll see that looks like a much more and looks like a much nicer range. So I would ignore this down here for the time being. Stock seems perfectly happy up here. And market seems perfectly happy trading it again. This looks like a little bit of a build. So I would, there's no real, possibly a little bit higher, but not incredibly so. Maybe up to around this 100, 105 over the near term. And let's see what the 10-day. Yeah, I'd say there's a little upward bias to it, but effectively it's found a new range. And unless there's some new information coming out, it's going to trade along. And of course, it's going to trade along with the market. But I think it looks all right here. Okay, good one. All right. Guys, go ahead and drop any more if you got in there. Meanwhile, I'm going to take a look at some of the individual markets. Let's take a look at first. Let's take a look at the S&P. All right, we got FOMC meeting coming up tomorrow. What do we got here? Let me zoom out. Let's start from the beginning. Let's zoom in on this. Here's the 1 minute, 1 day chart. So this is over the last day. 40.31 kind of failed off of that. Now it's building. The question is, does it go back down and retest this 39.82? I suspect, I'm not even going to punt how the market's going to react to the Fed's rate decision tomorrow. I'm sure they're going to do 25 basis points, mainly for optics. To make it look like they're not totally panicking and the banking collapses didn't catch them that much off guard. Right? If they don't hike at all when they were supposed to have hiked 50, that's like saying, oh my God, we really screwed up. Those are the kind of secondary and tertiary moves. You got to be thinking a few moves ahead, right? That's how many things factor into this. But anyway, could go down 39.82. But that's just 1 day. Let's zoom out. Let's see what the upper end of a range kind of looks like it wants to go back down. So and it peaked out of this value, this opportunity zone. This is an extreme move based on this point of control, and it peaked out and failed and is now back down. So I think we're headed back lower on the day. This kind of tells us nothing. The longer term, it all depends so much on what the Fed does tomorrow. it could go almost anywhere. Let's move on. Let's talk about gold. See if we anything in gold and Bitcoin, because I mean, my God, the Fed is going to have to go back to inflating. That's what they do. Let me get this out of here. Okay. Over gold over last, so gold is make, for a little context here, right? Gold has made a nice move from last November, from 16 up to 2,000. That's huge. And this is pricing in a Fed that has massively effed up. Although, this kind of looks like we're out. We've tested a long, an outside range here. The market might I think the market might take a while to move substantially higher, right? And it could trade back down to this 1839 level. Let's zoom in. Let's keep zooming in. See, this looks like initiating activity. All this thin volume up here, initiating activity, and now it's failed. So, and that's at 1845. So it's starting to look pretty good. No real resistance. I mean, this this 1944 is a little bit of resistance where it peaked up right here, and you see this break in volume, this gap in volume. Very low volume. But again, this is looking down to 1845. So, I think let's keep zooming in. Yeah, 1940. If it gets below again this 1940, was that the same level that we looked at just a second ago? Is that the 19? Yeah, right. All right. Okay, so this is all nice. This is all good. So this is a little bit of support. Did I say I may have called this resistance before, guys? But this is a little bit of support right here. But then you've got 1910 possibly taking it on down to the 18s, 1840s, something lower. Yeah, I think. And it's, yeah, I'd say we're looking a little bit lower on gold over the next few days. And that's my estimation. That's my estimation. Okay, what else do we got? Let's take a look at Bitcoin futures at least. Let me get this thing out of there. All right, Bitcoin. Boy, this has been a fantastic run from 1,500. I mean, what are you at? Bottomed out at 1,500. 14,925. And that was last November too, right? So gold and Bitcoin are starting to trade like a monetary hedge. Possible new form of money for us. It's you don't want to short this thing unless it gets below this 2645 here. So that's a ways down. Yeah, so it hasn't really. There's not a lot of high conviction, not a whole lot of volume up here at this upper end of the range. So we'll have to see, but you can see it's possibly filling out a new consolidation, and that's consolidating probably ahead of the Fed's actions tomorrow. Yeah, no real bias right here. I think you want to look below 2615. It could be motivated to move a few $1,000 down. Okay. All right. Let's see. Let's take a look at crude oil. Crude oil futures. So let's zoom out for a little bit of context here. This thing is crude oil. Can I get it all in? Let's look at the 1 day. Try to get as much in as we can. Boy, crude oil has definitely been trading on recession fears. What do you think? Think we can make this? So see all this volume building over the last year? This is more and more volume over the last year as we get down to lower prices. and then this pretty sharp drop off. Now that we broke below this 70 range, which we were trading in a range between 70 and 90 for months. When did this start? This is where we were right here. When did this start? December. Yeah, December. So that 82 to 72. We were bouncing around those forever. Now we've made a new break. This looks like it's building. I don't know. We could get down to the 50s. We could get down to the 50s here on this. It's initiating but kind of build, so it's not unhappy. There's some pulling in some trading down here at the lower prices. Yeah, this is new. This is a new zone for it. It's a new happy spot. You can see this. Here's that range that it was trading for a long time. And it has abandoned that range, and now it's moving on to new pastures, reflecting significantly slowed growth, possibly global recession, and who knows, the aftermath of a financial contagion sparked by a global banking crisis in the U.S., or sparked by banking crisis in the U.S., which is now transmitted through Europe. Let's see. Yeah, there's nothing near term, like a near short term trade that I'm seeing here, but the bias I feel is lower on crude oil. Let's look at natural gas. That's kind of a funky market here. Okay. Yeah. So I remember over the last couple of weeks, 3 weeks probably, it's been trading around here in this. Well, let me zoom out. I'll give you better luck. Yeah, it got up to 3, but we've been looking at this upper end of the 2 range and pointed out that it could go test the $2 lows again, and here it is, and you can see this formation right here. So, but we're there. Question is, how much more can we go? Is it initiate? So we're retesting the lows that we put in February. Yeah, it seems to have forgotten all about this. It's building some volume down here. I think we've got to grind lower. It's hard to say. I mean, these are imputing. It's hard to. I think we're headed lower. We could see $1.50. Just kind of eyeballing it here. Maybe we could get down. Good Lord, could we get down or no? I don't know. I see very little to keep natural gas prices higher here, and much of it's going to go heading lower. Okay. Any other questions or any other? I'm just going to keep rolling through these guys, but any other requests, just let me know. Let's see what else. What's another good market we can take? Let's look at the 10-year Treasury bond. Before we do that, let's move on to currency. So we looked at Bitcoin and gold. We've looked at the energy markets. And let's take a look at currencies. So the big ones. First off, let's look at the perpetual basket case, the yen. Okay, so we've got a new basically equivalent of a Fed cheat over there. Kuroda is no longer in. Kuroda was the name, right? But they haven't abandoned. The big expectation on Japan was that they would abandon the rate peg at 50 basis points. The 10-year, the yield, the maximum yield that they would allow bonds to trade at, and they haven't. They haven't done that, probably because everybody's afraid to move because everything's so sensitive. They're going to blow stuff up. They're afraid to do anything different. But this is 90-day on the yen versus the dollar. Looks like it's definitely built up a bearish pattern, right? And it could make another push down to these significant lows that it made. So that looks bearish to me. Let's see what a little nearer term looks on there. Yeah, that looks bearish too, right? See, it failed and then building volume, and then it's lots of trading anywhere through here, but we could gap down lower. So that looks bearish. Let's take a look at the euro. Same thing. Looks like it's reached an extreme range. What are we at? 108. Yeah. Excuse me. Let's go back to 90-day, like we were looking. Yeah, this looks bearish too. That'll be interesting. So, what are we pricing in here? I kind of that how gold. So you remember how gold looked generally bearish, right? Even though it's made a big move, and and I think longer term it'll continue to go higher, but it looked kind of bearish in the near term. And Bitcoin looked a little exhausted. Marathon Digital looked bearish, which is a Bitcoin proxy. All of that is saying, and then now the yen looks bearish, the euro looks bearish. All of that consistent. That's a consistent, stronger dollar message, which means you can say that the Fed might come out a little bit more aggressive than possibly what rates are pricing in or what the markets expect. They're expecting on a relative basis the Fed to be a little bit more aggressive and raise real rates more than other central banks have done. Or it could be a growth problem too. That growth in the U.S. will continue to be stronger relative than Europe and Japan, which no surprise there. That's easy. We do that. But all of this is kind of pointing to a more slightly a Fed that's more aggressive on a relative basis compared to other central banks. Let's look at the British pound. They almost blew up their system this summer. Oh, I guess it was fall. Okay, British pound. It could, this isn't convincingly bearish, but it's doesn't negate what we looked at. Looks like it's tested all the way back up to 123. We were at parity. If it gets below 121, it's going to make a big move. So this looks bearish to me too. So that's interesting. The market's kind of pricing in a little bit more out of the Fed. All right, we've got a few more minutes. I'm going to look at bonds, and if you guys don't have anything else you want to drop in here, that I'm going to call it. Ooh, before we move that, let's look at the Nikkei stock. Let's look at the Nikkei. Okay, here's the Nikkei futures. So, which is the Japanese stocks. I can't really see much here. Let's see. This looks like a little bit of a build up to 28,000, a little above 28,000. Let's look at that 90-day. Yeah, let's look 10-day. Okay. Yeah, I don't know. Not seeing a whole lot there to look at. Let's look at Treasury futures. Let me zoom out, give you guys some context here. So this 10-year Treasury futures. Yeah, we've come a long way. So this is all, the Fed pushing rates higher, bringing those prices down, right? So 114 is a good reference point, right? And that's where we've been testing the last few. Let's go 30 days. All right, so this is back down again. That's a little bit. So bond prices falling in this case. Unless they're really unless they're pricing in they could be pricing in two things: significant inflation or a more aggressive Fed. So inflation expectation or rising real rates. But with what we saw in the other currencies, this could be a little bit more aggressive Fed than the market's handicapping. Yeah. All right. Not seeing anything near term though. I mean, there's just so much uncertainty with what the Fed's going to do. Yeah. I'd stay off of that. So, that's interesting. So that's it, guys. I think the big takeaway is a stronger dollar, which mean at least a more aggressive Fed on a relative basis. Right, they're ahead of other central banks in terms of their hiking, and even if they pause, I guess that could be more aggressive than pause and don't necessarily cut rates. That could be much more aggressive than the ECB or the Bank of England has been. So, yeah, I think that's the big takeaway here. All right, I hope you guys got a good couple trades out of this. I appreciate you joining me, and we'll do this again next week. All right, take care. See you guys. Appreciate you.